Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this lesson, I'm going to show you an amazing Master Trader buy setup, which is one of our compelling bullish long setups that applies to any time frames. And I'm going to let you go through the analysis along with me to determine if you agree that it was a phenomenal setup. Every one of these simple candlestick patterns right here are bullish setups. They apply to all time frames, any instrument, it doesn't matter. They work on the opposite, on the bearish side. I'm going to concentrate on this one today, which is a Master Trader buy setup, but every one of these are independently bullish setups. And then our technical approach takes the setup, and then we apply the other concepts to see if it's a high probability setup, which includes such things as where is this setup in connection with the overall trend on multiple time frames? Is it on support or resistance? Is it showing relative strength or weakness? What are the broader markets doing? And then we just simply enter and manage in between. Here's another little picture of the buy setup with our criteria here. So we have an uptrend. We have higher pivot highs, higher pivot lows. Although not shown here, it's in an uptrend, and we want the rising 20 period moving average to be comfortably above the rising 50 period moving average. That's just a visual aid of a strong uptrend. We want a controlled pullback from a V top. What I mean by V top is it goes up and it comes right back. As opposed to multiple bars or consolidation, I call that a rounded or square top. On the way back up, that's going to be more resistance to get through. Now, the premise of an uptrend is higher pivot highs, higher pivot lows. We expect it to go through this prior major pivot high. We're looking for a pullback and reversal on support. Prior pivot highs are minor support. Prior pivot lows are what we call major support. We enter over the high of the reversal bar, stop under the low of the reversal bar, and manage in between. Here's a trade we gave to our subscribers last week. TX here, daily chart. Let me just start over here. Now this is a daily chart, and this is what the very simple tools that we have on our charts. Color-coded candlesticks, red and green, color-coded volume. The blue is the 20, green 50, red 200. That is all the information we need. We don't need misleading crazy oscillators giving misleading information. We read objective price action using our approach. So again, let's start here. I have a flat 20, flat 50. So even though you can't see it, to the left, that's telling me that the short and intermediate term have flattened out. Now we have a closing breakout. This bar right here, it made a big move, and it's pulled back. We have these other concepts that whenever we look at a chart, I'm talking about these other concepts. This would be one called a red bar ignored. This red bar should have gone lower, have an inside bar, have a closing breakout that closed over the last 2 or 3 bars. Big move up, pull back. This red bar suggested lower prices, didn't go very far. And now, this closing wide range bar, RBI means red bar ignored. I still have a rising 20, comfortably above the 50. Then the next bar, it broke out. We don't buy breakouts that go from the bottom of the range to the top of the range. We look for exactly this. We look for a controlled retracement to support and reversal. So these prior highs would be minor support. Notice how it came in a very, very controlled manner. This was a closing reversal bar over the prior bar's high on support. That's where we gave it to our subscribers here. This is in our close trade spreadsheet, and every one of our setups gives the date, the symbol, the technical setup, the stock or option strategy, and management in between. So we actually gave it over the high of this green bar. It gapped down and closed with an inside bar. That's actually a plus because it's an additional piece of information that a bearish gap was negated and it closed deep into the range of the prior bar. So it gapped up the following day. That was our entry, a 5-minute high. So we bought the stock here at 41.87, and we just simply, we sold a half lot here, as you can see, into strength at 25.17 way up here. And then we just went into simple trail mode, which means sell it under prior bar's low. And we have other trade management where if the bigger time frames and the broader markets suggest higher prices, we would only sell half and then let it form a new higher low pivot, and then we would trail pivots. But the market was questionable, and this had a big run. We just took our money under prior bar's low. We held this for 8 days, made 25% return on capital using our simple trail methodology. And the big volume here also suggests that kind of the last of the Mohicans, the bulls are in it. They're late to the party. This is the proper place to get in, not up here. Hope that helped. Come check us out in our Master Trader Live green trading room. My partner Greg Capper and I, we start at 9 a.m. every market day, giving a pre-market analysis of the broader markets, market internals, sectors, and I go over gap trades, our tier 1 trades, open trades. It's an amazing venue to interact with Greg and me throughout the day in real time to watch us apply our approach to trading anything that moves. Hope that helps. As always, email Greg or me with any questions. Look forward to seeing you in the next trade review video.